Welcome to those of you who have just joined us. We're going to give it a couple of minutes just while we wait for more people to join the webinar. And just acknowledge that there's going to be a bit of a beeping sound as people join us. It should end in a minute or two. So while we're waiting, just so you know, so we've had a look at who's registered for the webinar, and it's a mix of local government, wider government, and also quite happy to see quite a few of you have signed up from the private sector as well. So I hope you get some value out of this. I'll just give it another 30 seconds to a minute before we kick off. Okie dokie, I think I'll make a start. So first we'll just kick off with the MB karakia. Tawhia tō mana kia mau kia mai. Ka huri taku ao ki te pai kahurangi. Kei reira te aronga moku. No mahi tahi ka ora ka pōwai. A mata mahi katoa, ka pono, ka tika, tihei mauri ora. Welcome everybody. I am the government subject matter expert in prompt payments, and I'm also the government lead for e-invoicing, supporting the public sector. I've been with the e-invoicing team since its inception about 5.5 years ago, and my background spans accounting, finance, and in particular, procure-to-pay processes and systems. I love my job. Now, some of my colleagues from the e-invoicing have joined us today. So hello, everyone. In particular, I'd like to introduce my colleagues Linda and Alison, who will be participating during this webinar. Now, just for a little bit of housekeeping, we will send out a copy of this presentation after the webinar. It will contain links of relevance, which Alison Smith, our adoption advisor, will be pasting into the chat throughout the webinar. This webinar is being recorded. It will be saved on our website, and we will share a link with you in about 2 or 3 weeks. The core presentation should take about 20 minutes or so, and the remainder of the time will be to work through your questions. If your questions remain unanswered at the end of the webinar, please redirect them to us at einvoicing@mb.govt.nz. Now, of particular note, when asking questions, please use the Q&A function and do not use the chat function. This will help us triage your questions more effectively. And do ask questions throughout the webinar. My colleagues will try and answer as many questions as possible in the chat, but anything left over will be triaged to me at the end of the presentation. Now, there will also be an online poll towards the end of the webinar. Alison will drop a link in the chat for you closer to the time. And as touched on earlier, many of you have joined us today from local government. Some of the webinar content will be more targeted towards you. However, the content is still very, very relevant for those of you who work in wider government. Again, for those from the private sector, I'm pleased you're joining us. I hope you find value in this webinar, in particular ideas to improve your payment times. Now, the reason most of you are here is because there's a government requirement or an expectation for your organisation to pay invoices promptly. For wider government, this is the New Zealand government procurement rules. Now, I'm going to talk more about them shortly. But for those of you from local government, Ministers Watts and Penk sent a letter to your Chief Executive last October. I have an extract of this on screen right now, and I've got the main driver behind the letter highlighted. So the government wants to move cash around the economy faster and promote economic growth. This is one of the key benefits of prompt payments and e-invoicing. However, there are many benefits when you move cash around the economy faster. It boosts aggregate demand, which leads to higher GDP growth. It also improves liquidity, and this means businesses gain quicker access to funds, which reduce reliance on credit and lowers financing costs. It also strengthens working capital and it can and resilience during downturns. So these requirements were expanded from central government to encompass wider government early last year. Now the government is encouraging councils to adopt the same approach to further demonstrate leadership to the private sector. I'd like you to think of this as an opportunity. However, we'd like to say here in the e-invoicing team that compliance is actually an opportunity in disguise. I understand many councils and other organisations not covered under the NZGP rules have already adopted prompt payment practices, so go you. I'm now going to give a brief overview of the two NZGP rules, which about 100 government organisations are required to follow, and Ministers Watts and Pink obviously expecting councils to follow. Alison's about to paste a link to this rule in the chat. So this extract is of the prompt payment rules as they appear on the NZGP website. I acknowledge that these rules are a bit of a mouthful, but in short, agencies are required to pay 95% of domestic invoices within 10 working days and aim to pay e-invoices within 5 working days. Councils are expected to participate, as specified in the letter from Watts and Pink. The results will be published. If your council does not respond to the survey, we will still publish your council's name on the website as not responded. Now I'm going to give a bit of background on the prompt payment requirements. So I've been leading the charge with this since I started the role 5.5 years ago. It's been a successful initiative and it has been collectively met on average by central agencies since its inception. And it's also been collectively met by wider government since mid last year. As already touched on, cash flow can be a real problem for businesses. Suppliers to government support this initiative and report noticeable improvement in payment times. I remember soon after central government met the 95% target, I contacted a number of recruitment agencies and all of them reported an increase, faster payment times, which really helps their business. So this initiative promotes transparency to businesses and sends a positive message to the business community, with government setting in as an example. We've also found that it generates friendly competition among agencies and the CFO community. And also accounts payable teams have been empowered by the target. It gives them purpose. This extract of the payment time rules covers the high-level reporting requirements. The key point here is the clock starts when an invoice has been entered into your finance system, not the invoice date. The criteria in the rules do not cover every scenario. Over and above the payment types specified in the slide, there are a few invoice types that can be excluded. These include consolidated invoices, reoccurring invoices, direct debits, disputed invoices, that's if they are difficult to identify, as well as grants and levies. All of these are outlined in the payment times fact sheet, which I'm going to talk more about shortly. Now I want to cover some of the mechanics of the survey. The survey is issued late in the month after each quarter. So that means the next survey will be issued in late April. Also, your CFO is required to sign out your submission. We then concurrently publish the results and share them with ministers and respondents. Capturing the data is relatively straightforward. Most agencies have already developed automated reports. Meanwhile, a lot of ERPs have developed reports as well. So Oracle have a report in production. Technology One is putting the finishing touches on a report, which I believe will be included in their 2026A release. SAP have guidance available on how to configure a report, and Datascape have expressed an interest and said they will consider developing a report if customers request it. So if you're on Datascape, get in touch with your Datascape account manager and knock on their door. Might save you a bit of time. So this quarterly survey is also a mechanism for MB to track and report e-invoice and progress to ministers. I'm now going to move on to some reporting tips and considerations. So a key point here is to avoid unnecessary effort trying to nail down payment dates for messy invoices, provided they won't materially impact your numbers. We really want to avoid reporting on your payment times being burdensome, and rather we want you to invest your energy into speeding up your payment times. With this in mind, this is a high trust model, no auditing is planned. We want you to try and ensure consistency in reporting across periods. This is particularly important due to different system definitions of invoice receipt and payment dates. Please consider materiality. If you have a low volume of invoices that are difficult to capture, then don't waste your time identifying them, but please declare it in your survey commentary. Be transparent. I'm not going to share some of what we've been told has been working for many agencies. And this is all in order of what's working the best. So consider increasing the frequency of your payment runs. This is one of the first things to consider. Here at MB, we process about 60,000 invoices a year, and we made the call a couple of years ago to have daily payment runs. It's about finding the Goldilocks zone for your organisation. If you have high invoice volumes, more frequent pay runs should be more viable. Another key consideration is to update the payment terms in your accounts payable system. Most systems default payment setting is triggered by the invoice date. A quick fix is to change this to pay now terms. Another thing to consider is your invoice approval processes. Review if your checks and measures are fit for purpose. Sometimes they're overcooked, I've found. Now, quite broadly, system and process improvements. Fancy new tools and re-engineering processes save time. I think one simple thing I was reflecting on yesterday is to encourage your vendors to use your centralized accounts payable mailbox rather than sending invoices to the business contacts. We know it happens, and there's some organizations it happens a lot. When invoices go directly to your centralized mailbox, you get visibility earlier and you can process them earlier. And now the obvious one, e-invoicing. In this context, it's just another channel, but it should shave at least a few days off processing times. MB is running at about 15% of inbound invoices being processed as e-invoices. So some agencies are also reporting higher numbers and counting. Suppliers sending e-invoices to government report overall faster payment times, so it is working. But this isn't an e-invoicing webinar, so I'm going to stop talking about that now. Here are a few more considerations. I recommend you proactively report on payment times internally. I've seen this generate friendly competition among business units. One of the key tools we have found to be effective in driving messaging from your senior leadership team. Hold your managers to account and celebrate success. Staffing constraints. Well, it's a bit obvious, but this is an ongoing challenge in the current environment. If your leadership team is serious about paying your suppliers promptly, then they'll need to ensure your accounts payable team are adequately resourced. Contract terms. Review your key contracts and consider payment terms in procurement or contract processes. And lucky last, training and education. Internal change management is key. Raise awareness and drive accountability. Alison's about to paste a link to the payment times fact sheet in the chat. This is a comprehensive guide. It's a resource which I encourage you to familiarise yourself with if you haven't already. The payment times fact sheet is a downloadable PDF that includes reporting guidance, FAQs, how to submit your data, and a comprehensive list of suggestions to improve your payment times. It also includes a link to a sample survey so you can get a feel for the reporting requirements. Now, the core questions in the survey include total invoices entered in the quarter, invoices paid within 10 working days, and how long on average to enter invoices into your system. The survey also has questions on e-invoicing. Because of different workflow solutions and delays in invoices being entered into your system, a consistent measuring stick is quite hard to determine across agencies. For this reason, published reporting is broken down into 3 categories, which I'm going to show you on screen shortly on our website. It's broken down into efficient, moderate, and slow invoice data entry. There are varying workflow solutions in place across government, and some organisations simply take longer to enter invoices. This is often due to high volumes. Right, so on screen now is the MB website for showing the results for wider government payment time reporting. So we'll be producing, I suppose, a sister page for local government. Otherwise it'll get a little bit unwieldy. We've got high-level results at the top. But what I wanted to walk you through is the 3 separate tables. So the first table is efficient invoice data entry. This is where invoices have been entered within 1 business day. So these are the agencies which are on fire. And you can see most of them in green and meeting the target. Then we move down to the second table, moderate invoice data entry, and this is where invoices have been entered in between 2 and 4 days. And then lastly, those entered in 5 days or more. Now, a few final words before we start working through your questions. For those of you in local government, I encourage you all to configure or explore reports in preparation for the first survey, which, as mentioned earlier, is due to be issued in late April. Identify your baseline. If you're tracking below 95%, put a plan in place to improve your payment times. There are loads and loads of suggestions outlined in the payment times fact sheet. These suggestions have been have come from all the various initiatives agencies have done over the years. Lastly, I want you to, I also want to take this opportunity to talk about the Procure to Pay community of practice. I think there's a few people here who do attend it. We also call it the P2P COP. This is a quarterly knowledge sharing and networking meeting for government organisations. We share challenges and successes in procure to pay processes and systems. And it has a strong focus on e-invoicing and prompt payments. The P2P COP is a useful platform to network, share notes, and collectively solve problems. It will be of interest to councils who already have started their prompt payment and e-invoicing journeys. The next P2P COP is on 31st of March. I'm yet to send out the invite, but please email us if you would like to attend. Now, before I get to the Q&A, we will do our poll now. Now, Alison is about to put a link in the chat. But what I might do, actually, I'm just going to nip back. Actually, hold up, I've jumped the gun. We're meant to be doing Q&A now, aren't we? Sorry, the poll's last. Right, so I'm going to stop sharing the screen and hand it over to Linda and see if have we got many questions in there, Linda?
Yes, Andrew. So George Smith has asked, are CCOs, i.e. RTOs and EDAs, included within this requirement? And do you know if Xero has this functionality? Excuse my ignorance. I don't know what those acronyms mean.
I don't know what they are either. I'm about to Google them.
Is that, I guess it's a type of government agencies? Yeah, George, if you want to clarify what those are, we will try and answer your question.
Yeah, if you could put something in the comments, George, that'd be great.
Yeah, in the Q&A part of it, yeah, that'd be great. Now, Julie Perkins has asked a question, but I'm pretty sure you answered this during your presentation, but it might be worthwhile just reiterating this for all those that are attending here today. So where do we go to find out specifically what will be required to report so we can organise template reports so we can comply with this reporting standard?
Well, I'll tell you what, if you give me a moment, why don't I open up the payment times fact sheet, just give a quick tour. So just bear with me a moment.
Because I understand when you do send out the survey, Andrew, that you include the template so that they can see that.
Yeah. So this is the payment times fact sheet. Earlier in the presentation, I mentioned that there is a link to a sample survey. Where is it? Sorry, it's towards the bottom, I think. And here's a link to a sample survey. But also when we issue the survey, we send out an Excel version of the survey. This is because of some agencies require their CFO to physically sign it out, and so they complete a copy of the survey in a spreadsheet before actually entering it into the SurveyMonkey tool. So the first part of the payment times fact sheet does give quite a lot of comprehensive guidance. It takes an extract of what was actually included in the cabinet paper. And then it works through a bunch of FAQs. And these FAQs have been generated essentially based off all the queries I got early on in payment time reporting, just to try and capture every scenario. I did cover some of these earlier. So yes, Julie, I hope that answers your question. But you've got our details. If there's any other points of clarification, do get in touch. But I just want to reinforce that one of the important things here with payment time reporting is consistency. Usually, there's often some confusion as to whether some invoices are in period A or period B. It doesn't really matter as long as you consistently report them across periods the same way, because then the measuring stick is consistent as well. Right.
Michelle has asked, we already have weekly payments set up for our suppliers, and the biggest delays are the staff processing their invoices to the purchase orders rather than scanning and uploading of invoices. So how is e-invoicing going to improve this? Another few questions. Is it only around the accountability and calling staff out who don't match their invoices regularly? Why can't we raise awareness and accountability but still use our own current systems? It's a bit there to unpack.
Linda, would you like to answer the first part of that question around how is the invoicing going to improve this? And I'll look at answering the second part of it.
Yeah. So I guess the biggest part is that it gets into your system pretty much immediately. So it's a lot faster to get into the system. And the second part is the accuracy of the data that's been put in there. So the data goes in there completely and it makes it easier for staff to code them, and therefore they get that part of the process can be sped up. But the part about getting your staff to approve, that's a perennial problem that everyone has, and that's your senior leadership and empowering your accounts payable people to hustle those people along.
Thank you, Linda. Just in addition to that, there's loads of little things you can do to try and let's say police people who aren't coding or approving invoices or purchase orders on time. When I was at the Ministry of Justice, I led a project in this space, and one thing that we did is we used the management, accounting, and finance business partner community to basically be the policeman, to be the henchman. And so we would have live reports that go, right, here are your troublemakers, and they'd literally go over to their desk and go, excuse me, mister, you've been sitting on that invoice for 2 weeks now, or you've been sitting on that PO, etc. The other thing that I touched on earlier, and Linda also mentioned, is really driving the messaging from your SLT, from your senior leadership. It really does make a difference. And in a similar respect, when things go well, the senior leadership team should be acknowledging it as well. So driving from the top and holding managers to account.
All right, a question from Helen. She's got 2 questions. Invoices stuck in the system as incorrect PO or no PO on invoice. Are these regarded as disputed, as we have no control on length of time it will be solved? And then there's a second question, but should we answer the first one?
Yeah, invoices stuck in the system as incorrect PO or no PO on invoice. So that sounds like an error on the supplier's behalf. If that's the case, then that wouldn't be fair for you to be penalised, so to speak. So I would say that in that scenario that they are disputed, because you need to follow up with the supplier to get the details, because the whoever's in the AP team won't necessarily. It depends on the searchability of whether or not you can actually look up a PO or not. In some cases, well, in a lot of cases, usually you'll be going back to the supplier anyway, because most PO shops are no PO, no pay. And so you're trying to drive that behaviour. So I would call them disputed.
Second part to the question, if we are having to borrow money, what official stance is there on us meeting the 5 days impact on ratepayers?
Absolutely no expectation to borrow money to pay your invoices promptly. This is something we've come across in wider government as well. Sometimes there's links in the chain which fall over, and so an organisation has cash flow problems. And one organisation has actually used this reporting to highlight. So in other words, they're not meeting the target; they're way off it, and they're not receiving prompt payment, interestingly, from other government organisations, which therefore means they don't have the liquidity to pay their suppliers on terms of 10 days or less. However, that particular organisation is still paying their suppliers within the contracted terms, so the suppliers are happy. So, I mean, listen, it is a target, but it is also a mechanism. Now, what is the official stance on the 5 days for e-invoicing? I think with I might go off topic a wee bit here, but the 5-day e-invoicing payment time target was put in place to incentivize suppliers to become e-invoicing enabled and to send you e-invoices. The reality is that it's not a practical target, because when an e-invoice enters the system, enters your system, it's essentially following exactly the same process as a normal invoice. An e-invoice, so could shave 2 to 3 days off the data entry, depending on your OCR solutions, the backlogs for accounts payable, etc. Linda, have you got anything to add on that one?
Yeah, I guess there is probably a presumption that an e-invoice has is going to be more accurate and have less errors, and maybe therefore less exceptions, because of all that data coming in completely, and there's no errors from manual intervention or input. So I'll just add that, yeah. All right, shall we move on? So Christina, she says, I preface this with, I'm all on board for change, but I've been thinking about e-invoicing and have a few questions, which we've sort of covered off a little bit here. Councils are being directed to pay our invoices quicker. Has any thought been given to how councils can collect on our invoices quicker to help balance cash flows so we don't have a false economy where we are borrowing to pay out invoices early? I think you might have answered that one. How do you stop?
I do have a comment there, though, Christina. I mean, if every organisation in the invoicing workflow or food chain pays their invoices promptly, then everyone's better off. But it just takes one link in the chain. And often that link in the chain slows things down due to process or system issues, or more often than not, bad behaviour, bad actors. And we know that there's a lot of cases like that in the private sector. The government is really keen to try and drive prompt payment across the economy. There was a piece of legislation known as the Business Payment Practices Act, which was recently repealed, which did require large businesses to pay promptly. Because that's been repealed, the government's a little bit short on options, but we are giving advice to government on other policy levers, and it's going to be a long-term game. Should we move to the second part of the question, Linda?
How do you stop an e-invoice from being automatically paid if checks around quality need to be paid by our staff first? I can answer that. So e-invoicing is just another channel, just to quote Andrew, another channel to get the invoice data into your system. It does not replace or include any automation of approvals and payments. So your normal approval and payment checks still need to apply. So there's no automatic payment happening in that space. Not using PDFs stopping fraud is great, but does e-invoicing channel all our invoice through one portal system, which then points us at a one point of risk? What is being put in place for the system to not be hacked? Ooh, I'm not sure. It's a tricky one.
It is a tricky one. I mean, e-invoicing is a secure network. Every access point provider goes through an annual accreditation process, and as of this year, I believe every access point also needs to be ISO 9001 certified, which is the security certification. It's the thing with standard invoices. Most invoices are transmitted via email as a PDF. Email is an inherently insecure channel. In fact, only about 70% of emails are successfully delivered. I haven't fully answered that, but I think that covers some of the bases.
Yeah. Chelsea has asked, hi, our purchase order approvals and matching are generally where our batch processes are held up. How does e-invoicing fit in with purchase orders? Well, I'll have a crack at answering that one. So purchase order numbers this is a data point within the invoice that is sent and put into your system, straight into your system. So you can apply some business rules that does that three-way matching. And so if they've got the correct purchase order number on there, the business have goods receipted it for the amount of the invoice, then all of those things match, then you can do that automatically, and that should actually help speed up processing of an invoice. If any one of those things are not right, so if particularly if the business haven't goods receipted it, then yes, it will hold things up. Hopefully that's answered your question there.
Well, I'm going to cherry pick the next one, Linda, and I've kind of already answered it. It's from Adele Bird. Councils only receive income via quarterly rates payments. To achieve these timeframes, we might need to borrow, which comes at a cost to our rates payers. Are we still expected to follow these timeframes if it comes at a cost? Just to reinforce it, absolutely not. But potentially this is an opportunity to highlight some of your challenges in your commentary. Chelsea Jackson. Hi, our finance system is Magic Q. I see you mentioned Tech One and other systems that councils use. Does Magic Q have any reporting underway regarding e-invoices? Well, Magic Q is enabled for e-invoicing, but it's not. We have, to be honest, we haven't engaged them to discuss prompt payment reporting. That's because it's not that widely used, but maybe we'll take an action to just reassess how many councils are on Magic Q and look at engaging them. We've got finance system information for about 60% of councils, and we've been using that to help drive some of our discussions. And based on the data we've got, we didn't realise that many were on it. So that's something we can look into.
Council with one AP staff member working 30 hours per week. We pay fortnightly and make sure that invoices due with these timeframes are included in each pay run. We have no complaints that we aren't paying on time by local suppliers, as we will usually pay them in the earlier pay run anyway. Is fortnightly not sufficient when no one is requesting earlier payments and all invoices are paid before or by due dates?
Well, I suspect if you asked any of your suppliers if they'd like to be paid a week earlier, they'd say yes. We need to remember that this is also about promoting good behaviour to the private sector as well and leading by example. I think, Chloe, it's also really just understanding how many invoices you process per year. Usually it's organisations on sort of 10,000 less, I've found, have fortnightly pay runs. But most organisations have at least a weekly pay run, I find, if they're sort of above 10,000 invoices per year. But I know that these things, there's a lot of manual processes, a lot of effort required in a pay run. So you really need to weigh that up and to see if it's viable. But I do encourage you to look into it. Oh, next one, Linda, for Laura.
Yeah. Is it possible to prevent the issuing company from submitting an e-invoice without a purchase order number? I guess a question is, do you receive a PDF invoice without a purchase order number? And what's your process for dealing with that? So I just challenge you there. Do you go straight back to the supplier and ask them to provide it? Do you try and do some internal searches based on that supplier and see if a purchase order number exists or not? So I guess one of the short answers is that you could choose to let it through and it'll go through an exception process. Or you could have some business rules that it means that the invoice is rejected, as long as you have some messaging that goes back to your supplier, and that may have to come from you via an email or a phone call. So I guess it's talking about using similar exception processes that you do now for an invoice that comes through as a PDF. Anything further to add on that, Andrew?
Yes. So e-invoicing is the transmission and receipt structured data. And so when it's structured, you can put some smarts in place. And one thing we discourage is rejecting e-invoices because they don't have what's meant to be in it. As Linda touched on, you already have processes in place for your paper or PDF invoices. Generally, those processes should be followed where a human engages another human to correct something. However, there are other opportunities of e-invoicing. Sometimes reference information is put in the wrong place. And so access point providers provide document translation services like rules. They go, well, if somebody's put a PO number over here in this reference field, can you maybe pop it down into this reference field over here? So at MB, we've got a number of smarts in place. So when a supplier makes what let's call a reoccurring mistake, we can pick up on it and tidy it up.
We've answered in the Q&A section for Naomi, but for the benefit of others on the call here, does the prompt payment terms are for New Zealand suppliers only, or does it include payments to overseas buyers as well? It is only for domestic trade invoices, so not international.
Right, George has got back to us. Now we know what these acronyms are. And sorry, George, the local government's a fairly new patch for us, so we're still learning some of the lingo. Are council-controlled organisations or regional tourism offices and economic development agents included within this requirement? And do you know if Xero has payment time tracking functionality? Two questions there. First question, I don't know. The way prompt payments and e-invoicing have been working in terms of scope is if an organisation has a subsidiary which uses the same primary invoicing systems, then it's included. If there's a subsidiary who is on a different platform, then it's generally excluded. One of the rules around the invoice enablement is that it's around enabling your primary systems, not secondary. So the ones that send or receive the most invoices. One thing with councils and the invoicing is the low-hanging fruit is your receivables. It's not sending the invoices. It's something we're exploring. We're really keen to find a pilot council to look at it, but we know that it could be complicated. I'm going off track now, I've just realised. Right, second part of the question. Do you know if Xero has payment time tracking functionality? No, I do not. Sorry. I would expect them to, but I do not. It's something that we can look into with our Xero contacts. So feel free to get in touch if it's something you want us to pursue.
Yeah. Cool. Christina, we are on Magic and we are right at the beginning with trying to get them to prioritise implementation of being able to process e-invoicing, i.e. we don't have anywhere for an NZBN to be put against the debtor. Any help to push this along would be great. Okay, it might be one that we'll take away and see if we can investigate for that.
Yeah, so there's an action there. Alison, if you could take note for Christina Martin. Yeah, we'll look into that. It sounds like we might need to get in touch with our colleagues at Magic. Okay. Now, it looks like we've answered all the questions. Do feel free to ask some more, but I'm thinking we might head over to the poll now. So I was a bit trigger happy earlier on and a bit too excited. So on the screen is a QR code. Meanwhile, Alison should have put a link in the chat. If you could click on one of those. And it's a very simple, very short poll. And I'm going to flick across to it now. So I thought I'd ask this question because essentially it says, you know, are you already empowered? And it's good to see that quite a few of you already are. It is just good practice. Well, we've got a new question which has come on. We'll answer that after the poll. Okay, so a handful of you do, and it's good to see that some of you plan to do it. So, right, we're going to move on to the last question, a nice simple one. did you find this webinar useful? And just acknowledge that we will answer any remaining questions after the poll. And I'm impressed, we're almost exactly on time.
Yeah.
Okay. And if you haven't found it useful, please send us an email. Always appreciate feedback. We always want to learn and do better. Fantastic. Right, we'll end it now. Right. I see, Linda, you've already answered the question. So speak now, forever hold your peace if you've got any questions. Otherwise, we might be wrapping up 5 minutes early. So on that note, goodbye and thank you very much. Enjoy the rest of your day.